Markets continue to hover near the lowest point of the day. The mid-caps rally also fades after the first half of the session. Utilities and energy are outperforming while IT and financials along with FMCG leads the indices lower.
SEBI gives a clean chit to the Adani Group and its top executives on some allegations made by US short seller Hindenburg. Finds no violation of laws, fraudulent practices, market manipulation or insider trading. Adani Group stocks perk up in trade.
JSW Energy inks an agreement with Statkraft to buy its 150 megawatt hydro project for 1728 crore, taking its total capacity to 30.5 gigawatts ahead of its guidance. The company will also take over GE's boiler parts making business via a share swap.
India's Solicitor General tells the Supreme Court some solution may be needed on voter idea in the larger public interest, with government holding 49% stake. He adds that the facts have changed since the earlier petition. The Apex Court defers the hearing to next week.
It's the final 2.5 hours of what has been an action-packed week for our markets, and we are here to bring you Business Lunch on CNBC TV18. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me, as always, is Vamakshi Thoria. Vamakshi, good afternoon. Well, the bulls were looking to end the week on a high. That does not appear to be the case, but right now they are trying to defend some very important levels.
Absolutely, Hormuz. Absolutely not the Friday the bulls were hoping for. And of course, it's been an absolutely action-packed week, and in fact an action-packed day for you as well. But for now the Nifty is trading lower, down almost 108 points, and that move on the Nifty is largely being driven by the IT pack as well as the banks. If you take a look at some of the top laggards for the Nifty, ICICI Bank tops that list. 40 points lower is what the contribution has come in from there. Infosys is also around 1% lower. HDFC Bank, Kotak Mahindra Bank, HCL Tech are some of the stocks that are pulling the index lower in trade today. But when we look at the mid-cap end of the market, that is doing slightly better because the mid-cap index is actually in the green, up almost 0.1%. When you look at the advanced decline ratio as well, largely in favor of the declines, but it is mostly 1:1. Now, apart from that, as far as some PSU banks are concerned, on the flip side, they continue to do well. Union Bank is up almost 3%. UCO Bank is up 2.4%. Canara Bank is up almost over 2%. So the PSU part of the banking space continues to do well in trade today, Hormuz.
Indeed, and there are a lot of movers. Although broader markets have cooled off from the highs, you can't take away from the fact that there is a lot of stock-specific activity that is taking place. There are a couple of names that I wanted to highlight. Reddington is one of them, and of course, we've all seen the visuals of the Apple iPhone 17 launch in the city. 6% higher for Reddington. Aditya Vision is the other one, and Electronic Smart. These are the three names that have been buzzing. Reddington, of course, being one of the top suppliers for Apple in the country. So that stock has moved. The stock had moved 20% higher earlier in the week as well. So almost 4% higher for Electronic Smart, and Aditya Vision as well doing fairly well for itself in today's trade. But of course, the big talking point of today has been the Adani Group stocks. They pull up Adani Power at one point, had continued to trade around that 7% mark, and it's now trading with gains of around 12.5%. Adani Enterprises has moved to the highest point of the day. Adani Ports is starting to build on to those gains as well. So the Adani Group is doing fairly well for itself in today's session, and that is after market regulator SEBI cleared the Adani Group firms, Adani Ports, Adani Power and Enterprises of all Hindenburg allegations. Yash is joining in with more details on this. Yash.
Well, it is very important to note that this is not an interim order from market regulator SEBI, but a final order from SEBI, which comes as a huge relief for, of course, the Adani Group and its chairman, Mr. Gautam Adani, and this relates to the allegations which are levelled by Hindenburg Research. Essentially, market regulator SEBI, in its order, has cleared Adani Group and its chairman, Mr. Gautam Adani, of all allegations which were levelled by the US-based short seller Hindenburg Research. Essentially these allegations were primarily around two important points. One was siphoning of funds, and the second part around the allegations was about hiding related party transactions. Now, SEBI came out with two separate orders. In the first one, the SEBI has said that the regulator has found no violations with respect to the related party transactions. They've said that nothing at the time when these transactions were undertaken with unrelated parties, these parties did not qualify as related party dealings because the definition of that was amended in the year 2021 itself. SEBI also noted that the loans which were passed on were repaid with the interest that they carried, and hence there was no siphoning of funds, and hence there was no fraud or any unfair trade practice. Accordingly, with the verdict on these two investigations, SEBI has dropped all proceedings against Adani Group as well as its chairman Gautam Adani. Just a quick context, if you remember, in January of 2021, Hindenburg Research had alleged that Adani Group used three companies, Adikop Enterprises, Milestone Trade Links and Rehvar Infrastructure, as conduits to route money between the Adani Group firms.
Absolutely, Yash. Thank you so much for bringing us all of those details. That explains why all of these Adani Group stocks are flying high in trade today. In fact, some of them are perched at multi-month highs. Now, the other stock that we can't take our eye off is Vodafone Idea. Now, in another big development in corporate India, the Supreme Court has deferred the hearing in Vodafone Idea AGR dues case to September 26th. And my colleague Ashmit is joining us for more on this. Ashmit?
Well, a hugely important day as far as Vodafone Idea is concerned, especially in light of Supreme Court proceedings. Now, bear in mind, there are multiple petitions that had been filed earlier, review, curative, modification. All of them were dismissed. In the month of May, there was a fresh petition filed once again. And at the time, the stance of the government was that it was neither in for or against any relief to be granted, had left it to the wisdom of the Supreme Court. As we all now know, the Supreme Court had rejected that earlier petition. Now, there appears to be a dramatic change in stance by the government. The government now saying that the facts on the ground have changed. The Solicitor General Tushar Mehta appearing on behalf of DOT, on behalf of the government, saying that there is a need felt for support. There is a need felt for the court to grant its indulgence. Basically saying that the situation has changed. We want the Supreme Court to intervene and help with a possible solution, a possible resolution to this issue. Bear in mind, this is a petition where the Vodafone Idea has said once again that the AGR burden is too much for us. It will impact the very existence of the company. And now it seems the government siding with Vodafone Idea, saying that we're stakeholders here. In fact, at one point, Tushar Mehta also highlighted how the government is an equity shareholder to the extent of 49%. So essentially, the message being that facts have changed on the ground. Now the government's fresh stance is we want the Supreme Court to help with a possible solution to the Vodafone Idea issue. This hearing will resume once again. That's next week, Friday of next week.
Well, Friday the 13th, Friday the 26th. We'll keep an eye out on both of that. Ashmit, thank you for that update on Vodafone Idea. The stock doing well, though. At one point was up 10-11%, still holding on to gains of around 8.5%. Putting the spotlight now on Cohance. The stock was in focus yesterday after a block deal which saw Advent sell stake in the company. We spoke to the executive chairman, Vivek Sharma, on Advent's stake sale and on the opportunities in the CDMO space. Listen into a slice of that conversation.
Advent still remains after the sale as our key anchor shareholder. After the sale, they are at 57.5%. The intent of the sale was to broaden the investor base by bringing in top quality institutions. And importantly, Advent has chosen a longer term lock-in, which reflects their stronger conviction in the business. So I would view this as a positive, trend. The strong demand from institution highlights a strong conviction in the business and the management team. Generally, my observation, meeting with customers, meeting with other key holders, is that listen, the damage is done. People are looking at as an alternate to really have a backup and then move out of China if that is part of their supply chain. We are seeing improvement, and we are seeing RFPs that are coming now that were not there before, and they're in larger quantities, compared to what it used to be before. We are seeing more visits from customer to evaluate our sites and capabilities. So trend-wise, I am seeing traction there. In pharma, it's a very sticky supply chain. It takes time for it to materialize. I can also tell you in my interactions with customers in US and other places, depending on companies' strategy, there are companies that have a China-free strategy. So people are looking for opportunities to really de-risk their supply chain from China wherever it makes sense, and we are seeing traction in that space.
Well, that was the management of Cohance Life Sciences. But Keynes Tech, that stock was trading under pressure after it announced the resignation of its CEO. But we also caught up with the CFO, Jairam Sampath, and he told us what lies ahead for the company. And after that, we saw a brief recovery in the stock. So let's listen in to what he had to say.
Discussion with me that he wants to move on to Bangalore and that we would like to keep our headquarters here, and our major operations are in Mysore, so we would like to do that. So it has been friendly discussed and then well planned and done. There will be one or two more senior people coming in. There will be one or two more people coming in who has been with me for a long time, and then some people who have been with me for last 1 year, say around 8-9 months, who has been working along with me to take this position. So we have enough internal people who have been working as backup for everything. In another 2-3 days, it will come on.
Recovering from the lows of the day is Keynes Technologies, almost a 6% slide from the highs, and is now trading with losses of just around 1.5%. Now, from Hindenburg to another short seller, Viceroy, a bench of the Supreme Court has recused itself from hearing a PIL listed on the 8th of September seeking investigation into Viceroy's allegations against Vedanta. Now, the Supreme Court has also directed for the PIL to be listed before a different bench.
Well, earlier today, Sanjeev Goenka, who's the chairman of RPSG Group, spoke to Shireen Bhan about the group's big capex push, growing renewable energy, ambitions, and much more. Listen in to that.
For the next 5 years, what we are committing to is a total capex of about 1 lakh crores, largely in the energy area. It'll go also in chemicals, but chemicals is not that capex intensive, as you know. So renewables is going to be a large part of our investment. And let me make an announcement today on CNBC TV18. It's not only solar and wind hybrid projects that we are implementing. We propose to get into module and cell manufacturing. Our first gigawatt of module capacity goes on stream in the next 45 days. So that's something we've been quietly implementing. And in the next 3 years, there'll be 3 gigawatts of cell and 3 gigawatts of module capacity that will go on stream. We're keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful privatization cases of power in the private sector. And it is UP's most successful utility. So we have now begun to understand how to operate in UP. And Yogi Ji's government provides a very secure law and order, and so helps a utility for sure. Mm-hmm. We're keen, and we are going to bid.
All right, let's slip into a very short break then. More news and updates follow on the other side, so stay tuned.
Welcome back. Now, the United States has revoked its sanction waiver on Iran's Chabahar port, something which could have implications for Indian interests in the region. Now, what has actually happened is that there were waivers granted to the sanctions by the US in 2018 for that Chabahar port in Iran. And the decision will take effect from the 29th of September. And the sanction exemptions. Now, this exemption revocation is part of the US's strategy to impose maximum pressure on Iran. Now, why is the Chabahar port or the waiver, why was it important? Now, this was granted during Trump 1.0, the first term of Donald Trump's regime as president, and in 2018. And this was under the Iran Freedom and Counter-Proliferation Act, and it allowed India and other countries to develop the Chabahar port. Now, where is the port located? The port is located in southeast Iran and has two separate ports, which are known as Shahid Kalantri and Shahid Beheshti. And why it is also geopolitically important is because it's very close to the Gwadar port in Pakistan, where China has a lot of influence. Now, it acts, the significance of the Chabahar port is the fact that it acts as a gateway for India towards Central Asia and to Afghanistan, and it also acts as a counterbalance to China's influence on the Gwadar port. Now, this was first planned in 2003 that India will develop the Shahid Beheshti terminal of the Chabahar port, but that could not happen back then because of the sanctions that were imposed on Iran. Now, in 2016, now there was an agreement that was signed between there was a trilateral agreement signed between India, Iran and Afghanistan during Prime Minister Modi's visit to the country there. And there was a commitment that India had made to provide $500 million line of credit to develop the port. And Prime Minister Modi had also said back then that exports from the Kandla port in Gujarat to Chabahar and to Afghanistan will now become easier because of this. Now, what has happened recently? Last year, India and Iran signed a 10-year operations contract to operate the Chabahar port, which is already under India's control, the Shahid Beheshti terminal, since 2018. Now, under this, India was supposed to provide $250 million line of credit for port development and $120 million for equipments. So this was the pact that was signed last year, and already so far we've had 6 mobile harbor cranes that have been supplied. Other equipment worth $25 million has been supplied. 2.5 million tons of wheat, 2,000 tons of pulses from India to Afghanistan has been supplied, and a lot of, and when Iran was fighting the locust menace, there was 40,000 liters of environmental friendly pesticide, also something that India had supplied via the Chabahar port. Now, the no listed entities involved in this, barring one, was Ircon International, which was an unlisted entity back then when the contract was signed back in 2016. We were supposed to construct this 628-kilometer Chabahar-Zaidan railway line, but in 2020, Iran decided to drop India from the project because of delays on funding and on construction activity as well. Now, and they said that they will continue with the project by themselves. What next? Now, with all these investments that India has already made, that comes at risk because of this, the sanctions that will take effect from the 29th. There are also geopolitical tensions going on between Israel and Iran, so that continues to remain in the line of fire, and there is no official response yet from the Indian authorities on this, but it will be interesting to see what turn do things take, because it's not only investments, there is a lot of maritime back and forth exports and so on and so forth that pass via the Chabahar port that could be at risk because of this development.
Absolutely. So not such a great development when you think of it from India's perspective. And of course, we'll be waiting for some clarity that could come through probably from the Indian government or any comment on this particular matter. But take a short break, then more news and updates follow on the other side. So don't go anywhere. Welcome back. Apple has officially rolled out its latest lineup of smartphones in India today. A massive crowd gathered overnight outside Mumbai's BKC store to get their hands on the new iPhones, while long queues were also seen outside Apple's flagship stores in Delhi and Bangalore. The new iPhone comes with several upgrades with price starting at 82,900 rupees. The iPhone 17 runs on Apple's new A19 chipset, while the iPhone Air and Pro models feature the A19 Pro for enhanced performance.
Moving on, the US President Donald Trump is expected to speak with Chinese President Xi Jinping today in a critical call that could finalize a deal allowing TikTok to continue operating in the US. The conversation may also pave the way for a potential leadership summit to resolve the ongoing trade tensions. Trump, who has credited TikTok with helping him win another term, says that the US holds the platform's fate in its hands. Officials say a framework deal had been reached, but key issues including ownership, data privacy, and control of TikTok's algorithms remain under discussion.
All right. Thank you so much for that, Hormaz. But, as we wrap this edition of Business Lunch, take a look at the Nifty. There has been some recovery that has come through. Now the Nifty is trading with a cut of around 89 points. Some recovery coming in since the show started. So I guess we're the good luck charms, Hormaz. The mid-cap index also doing slightly better, up almost 0.2% now as compared to 0.1% when we started the show. But
and the fact that we are sitting in the studios is evident that we are not at the Apple store to buy the latest iPhone. I'm sure you would be heading out after the day is over
no, not at all,
the latest iPhone. But we take your leave on this edition of Business Lunch for the final time this week. From Amakshi and me, thank you so much for watching. But the day is not over yet. Mid-Cap Radar on to the final 2 hours of the trading session on the other side.